All right, what's up, guys? Happy 4th of July. I just got back from dinner with some friends, my girlfriend, and I don't really care for fireworks. So here we are, right? Sitting here staring at the chart. I am exactly what I despise the most, a fucking trader that instead of going and touching grass is sitting here staring at this white screen, losing their fucking mental stability. But my brain just doesn't really get stimulated by firework, big color, go boom, boom. So here we are, right? Bitcoin is pumping. Oh my God. It's so fucking exciting. Look at us, right? July 4th. The fireworks that are July 4th. Nope, they're not fireworks. It's fucking Bitcoin price action because we're up 6% on the day or within the past 24 hours, right? Congratulations. You have not accomplished shit just yet. So let's start from the top, right? On our weekly chart, if you show this to your 10-year-old, right, and you show them this sort of price action, where is it headed, right? What are they going to tell you? If you give them four options, right? Up, down, sideways in the form of a range, or sideways in the form of some sort of consolidation, right? A mixture of both of these lower highs, higher lows. It should take you 4 seconds. And more importantly, it should take that 10-year-old 4 seconds or less to determine that this is obviously heading to the bottom right corner. Wow. Right. So that means that I can only show you, or really how I should phrase this is I can show you 879 tops, right? I can't show you a bottom. I just can't. There's no bottom, right? The past 8 months or so, ever since like November of 2021, we have only been heading to this bottom right corner. So, statistically speaking, we're probably going to head to this bottom right corner until we stop heading to that bottom right corner, right? Cool. We understand that on a 8-month long time frame, right? Let's shorten that up a bit. If you show your 10-year-old this price action, what are they going to tell you? They're going to tell you bottom right corner, right? We're heading down. Okay, cool. So we understand that concept, right? And to portray that concept, we're going to do so by scaling assumptions, right? Because take a look. We go back to this weekly chart, and your bullish argument during all of this downtrend is, hey, we're still uptrending on the weekly, right? That's a high, that's a higher low, that's a higher high. We're still looking for that higher low. Maybe this is it. Okay, well, cool, but that's not really an actionable analysis because if you're sitting here making an analysis that, hey, we're still uptrending on the weekly, yes, that is true. However, what you're basically saying is, okay, we're trading at, let's say, 59K. We can go negative 33% from current price and still technically be bullish. Is that a good analysis? Fuck no, right? It's a shitty analysis. So what we need to do is we need to scale assumptions continuously, right? And more importantly, we're not really going to care about the very, very high time frame trend if all of the lower time frame trends are bearish, right? So we're not going to sit here and argue, oh, but the weekly's still bullish if everything currently affecting us totally negates that idea, right? If everything currently and more relevant to us is bearish, we're not going to sit there and make fucking bullish arguments on the weekly. That's just dumb, right? I'm not going to sit here and tell you, oh, you can drop negative 33%. So when we lose this sort of trend and we respect it beautifully on macro timeframes, right? I'm not going to sit here and argue the bullish idea on the weekly anymore because I'm scaling assumptions. I don't give a shit what the weekly says. I don't give a shit what the daily says. Look at this trend. The trend is now breaking, so that's most relevant to me, and that's how we ended up bearish for these 3 months, right? Okay. So, do we even have a counter argument as of right now? Because how we're going to scale assumptions is similar or inversely similar to how we did back here. So, if we zoom out to that weekly, our 10-year-old knows within 4 seconds we're heading to the bottom right corner on an 8-month long time frame. If we go to the daily, our 8-year-old, 10-year-old, whatever, tells us again within 4 seconds, hey, that's a downtrend on our daily, right? We're going to portray that idea by using the 4-hour 200 moving averages. Why? Because they got respected beautifully on a high time frame basis. Okay, cool. So basically, what we have instead of saying like, "Hey, we need to like reclaim this demand zone, right? Of resistance somewhere over here. Hey, we need to reclaim that and make a higher high above these highs, and then we're bullish." The analysis that you just gave me is, hey, we can go 60 set or right 62% higher than current price and still technically be bearish. Again, shit analysis, not very actionable, right? This is going somewhere, I promise you. I'm going to wrap it up. So instead, what we do is we scale assumptions and we say, well, if we were to reclaim the 4-hour 200s, then that would kind of portray this idea of us heading to this top right corner, right? Our 10-year-old would then look at this price action if this is where we're at currently, and they would say, well, I can't really tell if it's bottom right corner or if it's starting to be top right, but it's kind of starting to be top right, right? Like it would start to be 50-50. Whereas compared to currently, they would absolutely 100% guaranteed, as long as they know how to read, right? And have some sort of competency, they would absolutely tell you downtrend, and it would take them less than 4 seconds. Here, they would have to kind of scratch their heads a bit. And then eventually we would say, okay, well, our 10-year-old is absolutely going to say top right corner, right? And we got to jump on that price action, or we would assume that that would be so by adjusting and scaling assumptions from lower time frames, right? So basically, the conclusion that we came to is based off of the 4-hour trend or the 4-hour 200s, right? We're now portraying the daily trend. So basically, as long as we're still below this daily trend, we're still heading to the bottom right corner on the daily time frame. Okay, cool. We already know that that is the case on the weekly time frame as well, right? So if our weekly is bearish and our daily is bearish, and it takes a 10-year-old 4 seconds to determine that, what is bullish, right? Merc, we just said fireworks today, 7% off the lows, within the past 24 hours. Isn't that bullish? Isn't that strength? Well, per this gray box, the random gray box that I have in my chart that may or may not mean anything, along with something that has been historically, or not really historically, but recently significant, along with very recently significant, and portraying that idea of intraday trends. So if our weekly is bearish, our daily is bearish, right? And we're using the 4-hour to portray the daily, and we'll use the daily to portray the weekly. So we should be able to use something kind of lower time frame to portray something within the daily, meaning intraday trend, right? So I like to use these 2-hour 200s. Not because I like the 2-hour 200s, not because I like obscure time frames, just specifically because Bitcoin has respected them pretty well within the past 3 months or so, as well as within the past couple days, right? Couple weeks or week and a half, whatever, right? So that's why we're going to use the 2-hour 200s. So if we're still below the 2-hour 200s, along with Merck's random fucking gray box, right, which can be further validated with something like a fixed range volume profile to portray that, hey, there's a lot of volume that got traded in this region. So this is probably going to act as some sort of resistance, right? People are going to want to either buy or sell, and that's our point of control. So once we flip all of these things, we can say, hey, we're above the point of control. Hey, we're above the intraday trend. Hey, we're above Merck's random fucking gray box, right? And then you could say, oh, well, X, Y, and Z uh, market structure is bullish on whatever time frame, and Ichimoku Cloud is doing this, and you can tag on whatever else you want, right? Because per my system, everything that I just gave you A lot of other shit is just going to simply agree with that. If you go look at stochastic RSI, it's going to be turning upwards. If you go look at RSI, it's going to be towards the top, right? And it's going to be saying, oh, this is overbought, right? But really, what that is showing is there's a lot of strength, there's a lot of relative strength, there's a lot of momentum. Um, so whatever you're going to use, right? You'll probably agree with me at this point that we are then uptrending on intraday timeframes, right? Below the daily price action that you cannot fucking see below the daily time frame. If you go back out to the daily time frame, it just looks like a bunch of candles, right? So using that sort of analysis, we can kind of give ourselves an assumption of what to expect, right? And scale assumptions upwards. If you saw my price action as a snowball video, that's exactly how I'm kind of thinking about this. If we manage to reclaim the intraday trend, then we can go on and at least assume that we'll be able to test the daily trend. And that leaves a 11 or 12% gap in between, right? So that would be like we would consider that white space where yeah, there's some resistance levels, there's whatever, but we have done something significant enough via what the fuck is locally relevant, right? So the fact that we tested those 2-hour 200s several times and used them as resistance not only within the past week and a half, but also several times within the past 3 months or so kind of gives us an idea that if we manage to reclaim those 2-hour 200s, then that is a snowball of strength, right? And from there, we would kind of just assume that our snowball rolls down the hill and we see, right? Does it either hit a tree and melt all the way back down into a snowflake once again or a clump of snow? Or does it roll its way up into these 4-hour 200s, and all of a sudden we do something along these lines, right? And now that's even more significant than what we would do over here around like 20.5, and we would scale assumptions thereafter as well. And we would say, well, we already built the snowball, we acknowledged it, and we went on to build the body of a snowman, right? We're doing something that you have not been able to do within the past 3 months. So I don't know, that's probably significant. And then we would be able to scale assumptions once again. Hey, if we manage to reclaim those 4-hour 200s, we might see a nice little gap of white space from, let's say, 24K to like, oh, I don't know, these 200 daily moving averages, because those get pretty nicely respected on a historical time frame, right? On a very, very large time frame kind of basis. So we would continue to scale assumptions up that way. But the point I'm trying to make here is regardless of the fact that you're up 7%, you do not get a fucking cookie for that, right? If you're a bull and you somehow manage to buy this local low and now you're up 7% and you're, clout chasing and whatever else, I don't give a shit. You're making cash. I'm printing wealth, right? There's a big difference. So the point is, I can't show you any bottom, but I can show you 893 tops, right? And if we're not showing strength on any significant time frame, and no, bounces are not strength, wicks are not strength. For every wick, right? Uh, Everyone needs to get this out of their head. Candlestick trading is by far the worst fucking way of trading, period. It's so garbage, I can't even describe to you. This is a bullish candle. Oh my God, Mercury, look at that wick, and it totally fucking reversed. These are very bullish candles. Oh my God, Mercury, that looks like a bottom to me, and it totally got fucking reversed, right? This is a bearish candle. We only saw -3%, and then we immediately retraced that move in the days after. Basically, for every candlestick that you show me that coincides with what it's technically supposed to imply, if you're that textbook TA, I'm going to be anal about everything and I know candlesticks because Big Cheds on Twitter showed me them, right? If that's you, every single candlestick that you show me that coincides with whatever the hell it's supposed to imply, I can show you 4 or 5 candlesticks that totally negate that idea. They shouldn't be used to justify a bias that you already have. They should only be used to kind of enforce an idea that you have off of different style of trading. That's it. That's really it. Don't use it for anything else. It's fucking garbage. It is absolute garbage. So, what I mean by that is, regardless of the fact that we're up 5%, regardless of, oh my God, Mercury, have you seen these wicks at the bottom? That's not strength. It might be strength on a very, 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 very minuscule or trivial time frame, right? It might be strength on a very minuscule time frame, but it's not significant enough. I promise you, a lot of you watching this right now, 90% of you would have been better off totally fucking off and watching those fireworks, pretty colors go boom boom instead of trying to trade this price action. And you don't really give a shit about 7%, because if you care about 7% for Bitcoin, you don't actually care about Bitcoin. You care about the 7%, right? If you actually cared about missing this 7% push on Bitcoin within the past 24 hours, you don't care about Bitcoin. You just care about percentages. And if you care about percentages, you have to care about every single percent on every single asset that moves, period. Right? If you don't care about percentages and you're saying, no, Merc, you're wrong, I do care about Bitcoin, then you would have been buying this entire fucking downtrend from 69K to start with, and you wouldn't be watching this video right now. Stop lying to yourself. So I think that's about it for my rambling. I don't really know what else to say. Thank you guys for letting me rant at you. But I hope you got some value from this video, and know that I really do care about you guys, and I don't want you to fucking lose a bunch of money. So we're all going to make it. No, that's not true. Probably 3% of you are going to make it. I'm hoping that I'm going to make it. And if you want to help me make it and you liked this video, then like, comment, subscribe, share it with your grandmother, donate to my Avocado Toast fund. And yeah, use my ref link on Bybit because it's a great place to trade and I really like it. And you get a massive discount on fees. So thank you guys so much for watching the video. Appreciate you all. Much love. Take it easy.